So you've got an LLC, you're making some money, and you have some questions, specifically around how to pay yourself while paying as little in taxes as possible. Well, in this video, I'll be showing you the big mistake that many LLC owners make when they pay themselves that results in them paying way too much in taxes, how you can save tens of thousands of dollars or more every single year in taxes by following this exact method, and then step by step how to execute on it yourself. Now, I want to mention that this is not tax advice, this is not legal advice. I am not anything more than a dude on the internet with a finance degree, so don't take anything I say too seriously, and if you have any questions about this, feel free to consult a professional. You can comment below, but I cannot give you any kind of advice. Just got to get that out of the way so I don't get sued. Now let's start off with how most LLC owners pay themselves that results in them paying way too much in taxes. Now, I hope you have at least a separate bank account for your LLC, and if you don't, that's a whole different problem. I've got a link in the description to the bank account that I personally use for my LLC. So if you don't have that, that's step 0. Set that up first. You need to have separate banking for your LLC and your personal finances. I'd also recommend having a business credit card so that you can fully separate all of your business expenses from all of your personal expenses, but the bank account is definitely a must. It's also free, there's no fee, there's no anything, so definitely just set one of those up. Now, when most LLC owners want to pay themselves, what they're going to do is they're going to take a distribution from their business bank account and move that into their personal bank account. That is not what you want to do, okay? Because that's going to result in you paying more than your fair share of taxes because you're doing things the wrong way. Now, why is that? Well, that's because when you make a distribution like that, you're subjecting yourself to both income taxes and self-employment taxes. And as an LLC owner, you should not be paying both of those taxes on 100% of your income. If you are doing that, something has probably gone wrong. And this isn't even how the government intends to tax you. You're just choosing to pay too much in taxes, okay? You're not like following the rules and being a good Samaritan. You're literally paying more in taxes than the government intends you to pay. Now, let me show you why that is. Well, if you're making $100,000 per year from your LLC and you're just doing the move from business bank account to personal bank account method, you're going to be paying about $15,300 in self-employment taxes and probably about another 15 grand in income taxes, assuming that you don't live in a state where state income taxes do apply. If you do, you live in a state like California or New York, you're going to be paying even more in taxes, up to potentially another $10,000 to $12,000 income taxes for that as well. But assuming those don't apply, that leaves you with about $69,700 in after-tax income. And again, that's very approximate. I'm not accounting for deductions. There's a lot of things that play into that number. So it's a very, very approximate number. Now, the income taxes you're going to pay regardless, but the self-employment taxes should not apply to 100% of your income in most cases. And let me show you why that is. So this leads us to how to pay yourself the right way. Now, if you want to save on taxes, you have to do things by the books, okay? I'm not suggesting you do anything that is against IRS code. I am suggesting you 100% follow IRS code and do everything by the books. So one of the implications of this is that instead of just transferring money from your business bank account to your personal bank account or writing yourself a check, you need to set up payroll, okay? So if you were working for a company, they wouldn't just cut you a check and pay you under the table. I mean, maybe they would, but if you're working for an established company and you're not some 16-year-old working at a restaurant, they're probably not going to do that, okay? And they're probably going to give you a paycheck, a pay stub every, say, 2 weeks, maybe every month, with how much money they've paid you and that paycheck attached to it, or maybe you have direct deposit set up, whatever. They're going to give you a pay stub and they're going to run payroll. That is what you have to do as a self-employed person. Okay, you got to put your big boy pants on, and as a self-employed person, run payroll for yourself. It's going to allow you to save a lot of money in taxes, and here is how it all works. So basically, every month, your business is going to cut you a paycheck. Now, beyond this, you can also pay yourself more, and we'll talk about how that works a little bit later. Now, in order to do this, you're going to have to set your LLC up so that you're both an owner and an employee. Because right now, your LLC is probably set up so that you are the owner, but you're not employed by your company. So if you're just the owner, you're not going to be getting a paycheck. If you're the owner and the employee, wearing the employee hat, you're going to be getting a paycheck. Wearing the owner hat, you're going to be able to take distributions. And those are taxed differently, but we'll get there in just a second. Now, in order to do that and set up that distinction between owner and employee, you're going to need to file something called the S-Corp Election. This is Form 2553 from the IRS, and I'm going to explain how to do this in just a second, but before I do, I need to give you the 30,000-foot view of how this is going to save you thousands of dollars. So, how does this work? Well, as an employee, like I said, you're going to be paid a salary. As the owner, you're going to take owner's distributions. Each of these are taxed differently. With a salary, you're going to be paying both income taxes and self-employment taxes, just like you likely are right now. However, owner's distributions only have income taxes and they don't have self-employment taxes. Pretty neat. So say you again made $100,000, but this time you had the S-Corp election set up so you're both the employee and the employer. Well, if you paid yourself that full $100,000 as owner's distributions so they're not subject to self-employment taxes, instead of paying over $30,000 in taxes, you're only going to be paying about $15,000. Again, very, very rough estimations, but there's a problem here. And the problem is that's not actually allowed. If you have an S-Corp set up, the IRS requires you to pay yourself a quote-unquote reasonable salary. So the salary for your employee self needs to be quote-unquote reasonable for the tasks that you are doing, for the thing that you are employed for at this particular company. Now, this is going to vary a lot based on the type of work that you're doing. So the reasonable salary for a doctor is going to be significantly higher than, say, the reasonable salary for maybe a video actor or for a marketer, whatever else you might be doing through your LLC. So let's say for whatever you do through your LLC, you determine a reasonable salary to be $40,000 per year. And to get to that number, there's a whole number of methods you could go through. I mean, just looking at what an average salary is for whatever position you would qualify yourself as is a good starting point. Talking to a professional, never a bad idea, but just figure out what is reasonable, okay? Because the situation here is basically if the IRS were to audit you and to look at how much you're paying yourself as a salary and say that does not seem reasonable, it's going to be on you to justify why that is in fact reasonable, either based on the number of hours that you work per week or the tasks that you're doing. Okay, so you have to be able to justify why the number you're paying yourself is in fact reasonable. But let's say you determine that $40,000 is reasonable for you. So you're paying yourself $40,000 as the employee as salary, which is going to be subject to both income taxes and self-employment taxes. Then the other $60,000 is paid via owner's distributions, which are only subject to income taxes. Now, by doing this, again, all approximations that don't apply to your personal situation, you would bring your total after-tax income from $69,700 that we talked about earlier, all the way up to $78,880, which saves you nearly $10,000 in taxes on only $100,000 of income. Not a bad deal. And say instead of $100,000, you're making $200,000 per year, and you have the same $40,000 a year salary. Well, then you have $160,000 in distributions, which makes the impact just even higher and higher. All right, so that's the big picture. Now, how do you actually do this? Okay, now that you understand kind of the fundamentals and what's going on behind the scenes, how do you actually execute on this and save yourself a lot of taxes? Well, there's two things you got to do. The first of which is that S-Corp election. The second of which is running payroll. So let's start with the S-Corp election. First off, I've got a bunch of other videos on S-Corps and how that all works on the channel, so you can feel free to check those out if you're still a little bit confused. But basically, an S-Corp election just sits on top of your LLC and tells the IRS that you want to be taxed differently. So you're not changing your business's structure necessarily, you're more so just making a statement to the IRS saying, hey, instead of taxing me like this, I'd like you to tax me like that. And the most important piece of this is it allows you to be treated as both an employee and an owner of your business. Now, in order to do this and file this tax election, basically all you have to do is file the Form 2553 with the IRS. If you just Google IRS Form 2553, it'll be the first result. You'll just click on that, print it out, fill it out, mail it in. But likely a good idea to talk to a professional on that because there are some things on there that you might not really understand how to fill out. It's a pretty simple form, but never a bad idea to talk to somebody who knows what they're doing. So now at this point, once that's been filed, you are both the employee and the owner of your business, and we're moving on to the last step, which is to actually run payroll. Now, unfortunately, payroll is a very intensive process that goes beyond just kind of writing yourself a check, because if you're just writing yourself a check, that's the exact same as that original process of you just moving money from bank account to personal account, and you're not going to save anything on taxes by doing that. So in order to actually run payroll, get pay stubs, and send out a paycheck, you need to have a payroll service. So if you've worked for a big company before, I'm sure you've seen like ADP and Paychex and a number of different payroll providers that these big companies work with to send out their paychecks. Now, a platform like this basically handles the withholding, the reporting, the taxes, and all of that stuff for you so that you don't have to worry about filling out mountains of paperwork every single month. Now, you've got a variety of different options for payroll providers when it comes to small businesses or self-employed people, but what I personally use is a platform called Gusto, and I'll leave a link to them at the top of the description below. This is my personal recommendation. I mean, I spent dozens of hours trying to figure out which platform to use because I didn't want to have to switch later down the line if I found a better option. And so I've been with them for about a little over 2 years now. I've got 2 different businesses running my payroll on Gusto, and I've had nothing but positive experiences. Essentially how it works is you create an account for your business, and then you set how much your salary is going to be every single month. Then every month, you'll just log in once, you'll press the Run Payroll button, and it'll take care of literally everything else. It's actually that simple. It's really, really nice because I don't want to spend any more time than I need to thinking about this stuff. I just want it to be as systematized as possible. And basically the process is you run payroll and the cash just goes from your business account to your personal account, except all the reporting, withholding, and all that stuff is taken care of for you. Also, they're running this deal where if you sign up through someone's referral link, you're going to get a free $100 Visa gift card just for signing up to Gusto. So if you want to support the channel and you got value out of this video and you're going to save some significant amounts of money on taxes after watching it, I'd really appreciate it if you did use our referral link in the description below to sign up. And hey, it also helps you out in the process and gets you a free $100. On top of that, feel free to comment below with any questions you have, and I'll do my best to help out. Best of luck out there, and I'll see you in the next video.